present value investment factor of an annuity. Meaning what? Meaning, since we are talking in the context of fixed income securities, invariably we are talking of a situation where I'm making investment in certain fixed income securities, and on those investments that I'm making in fixed income securities, I'm going to get a fixed cash flow over the tenure of that fixed income security. Meaning what? Meaning it's a situation which is an annuity, because I'm sure all of you would remember we discussed what is an annuity. Annuity is a cash flow when the amount of cash which is coming is fixed, the period for which it is going to come is also fixed, interval at which it will come is also fixed, and the rate of return that will be earned on this investment is also fixed. So when all these four things are fixed, it becomes an annuity. So remember, as a wealth manager, as an investment manager, as a mutual fund manager, as a pension fund manager, as any other wealth manager, my responsibility is to ensure that the return that I earn for my fund on all the investment that I make in different fixed income securities, that return is much higher than the cost of the fund which my fund is incurring on these funds, isn't it? So, since I am dealing with the fixed income securities, I am dealing with the annuity. So, since I am dealing with the annuity, I do not have to calculate present value of future cash flows year wise. Since I am dealing with the annuity, I just need to calculate the value of the entire annuity. And for calculating the present value of the entire annuity, instead of calculating present value for each year, what I can do, I can simply use a factor which is known as present value investment factor of an annuity. And how do I calculate this factor? So I would calculate this factor using this formula, and the formula is 1 plus k raised to n minus 1 upon k for bracket close 1 k 1 plus k bracket close 1 plus k raised to n. So if I solve this formula, right, what will I get? I will get something which is known as present value investment factor of an annuity. So what do I do to find out the present value of this annuity? I just find out the present value investment factor of this annuity and multiply it with the amount of annuity. So when I do this, I will get the present value of the entire annuity in one single calculation. Please remember, friends, today we do not have to do these calculations manually in real life. So everything is today on in the Excel or in some other program or in some other application when it is readily available. But we need to understand as a concept. Plus, in the exam, we will have these kind of questions coming in that we should be able to crack, because the valuation exam is not to check anything else, but it is to check as to how is your fundamental and conceptual understanding of various aspects of valuation. So this is the formula for finding out the present value investment factor of an annuity. And let's do a small case, and this is the case which is here. A person invested certain amount of money in a project. The project generates rupees 2000 at the end of the first year and second year and third year. So since the amount is fixed, it becomes an annuity. The cost of capital or the discount factor is to be worked out at the rate of 5%, and the period is 3 years. Using the present value investment factor annuity, please find out what is the present value of this annuity. Should not take you again more than 1.5 minutes. Anyone who is ready with the answer, please call it out.